Drew Sutton Leadership Show, lighting the way with real leaders, real stories, and real impacts. Because when leaders stop growing, the darkness wins. All right, welcome back to another amazing episode of the Drew Sutton Leadership Show. Today's guest, Tim Brown, is the founder of Four Quarters Capital, a registered investment advisor based in Lexington, Kentucky. With 20 years in finance and a background in women's college basketball coaching, Tim brings both strategy and heart to leadership and financial advising. He holds degrees in history and applied philosophy and ethics, and is known for cutting through financial noise with clarity, honesty, and humility. He's a fierce advocate for ethical investing and advising. He's for better conversations in the industry and empowering everyday investors to make smart, confident decisions. Off the clock, Tim serves on nonprofit boards, supports Nottingham Forest, is into fencing, and collects board games. Always learning, always competing, and always serving with purpose. With no further ado, welcome to the show, Tim.
Good morning, Drew.
Hey, man. This is a super fun episode for me. Tim is the consummate networker. Tim has been at every networking function that I've gone to in the last year. Some that I've hosted, some that I've attended, some that I should have attended, and is just out there beating the pavement because you're starting your new firm. Talk to us about that.
So this April, after being in the financial advising industry for about 6 years, and kind of the culmination of everything I'd learned in that time led me to figure out that I could actually start my own firm, in the sense of actually, being able to operate through the state of Kentucky without any entity over me. So because I kind of discovered it was the most way to just have flexibility to work with people the way that I wanted, to make the business lean and efficient cost-wise, which made it easier to work with people regardless of their income level. And also just gave me the flexibility to really inject my personality into the business, which is really important, especially in an industry that is highly regulated, where much of our services are homogenous because we can't really, deviate. Being able to express your own personality and your own approach is a great way for clients to kind of figure out, all right, within this highly regulated industry, which individual person am I going to really gel with and connect with well, so that we can communicate and accomplish my goals.
Yeah, I think it's so important. It's so easy to just find an advisor who's turning the crank and getting clients and then moving forward and giving you a generic piece of investing advice. I've enjoyed getting to know you over the last over a year now. I think got to spend a lot of time with you, and I love your vision for the individual and helping people understand what they're actually getting into. So if real quickly, just because I want everybody to know, what is your company? What's the name of your firm?
So the name of the firm is Four Quarters Capital, and the name comes from my experience coaching basketball. Particularly that we want to make sure that we nail all 4 quarters of your financial life, and no matter what quarter you're in, that it's not too late to get going, right? So when I coached, we would certainly have some games where, we would kind of mess around in the first half and not take our opponent seriously, and then we'd have to really kick it in the second half or come back in the fourth quarter. Right. So ideally we want no fourth quarter comebacks, right? Because in your working life, your fourth quarter is the worst. That's when nobody wants to hire you. You're getting old, you're wearing down. So we want the same outcome for you that we had in our best played basketball games, where we got to the fourth quarter with a huge lead. We didn't have to worry about winning the game in the fourth quarter because we had completely taken care of business those first 3. So that's the whole mentality behind the name of the firm. And again, it hopefully gives people a sense of urgency, right? The sooner you start building your lead, the less stressful that back half will be.
Yeah. So your ideal client, obviously, if you're towards the end of your career, that fits as well. But really, your ideal client is somebody that's in their 30s, early 30s, late 30s, looking to get that first and second quarter figured out properly.
I would say it's not necessarily that's my ideal client, but that is the ideal time for you as a client to get going. And that's where, the flip side of that is really I'm an ideal advisor for you because I have, as we'll get into later, I've really set up my business to be able to accommodate you and help you as opposed to, because a lot of people think like, oh, once I have X number of dollars, then I'll be able to work with an advisor, which for a lot of firms is in fact true. But again, leaning into the mission of giving people help right from the start, I am not set up to work that way.
Yeah, no, I get it. Well, today's title is Building Real Wealth, Taming the Wolf of Wall Street. So why don't you talk to us a little bit about things that we can do so that we're not victim to the advisor that a lot of the advisors that you meet, like the one-on-one person that's sitting across from the desk from you, they truly do care about you. But the system within their works, the brokerage above them, the firm above them, has certain metrics that they're pushing hard on the advisors. So what sort of things should I watch out for in my 30s, in my 40s, as I'm building my wealth portfolio, so that I can really tell that the advisor is on my team?
That's a good question. One of the key ways is just understanding the way that your advisor is compensated, and also what other conflicts of interest, who else are they trying to keep happy besides you as the client? Which for me was a major reason why I went the completely independent route, because the only people that I have to keep happy are the state of Kentucky and my clients, and then my wife. Right. But from a compensation standpoint, again, advisors are the person sitting right in front of you. Generally, they want to help you. They're out there sponsoring your local Little League team. But they have people above them. They're like, look, you need to be able to bring in this much revenue, which means sometimes they'll put you in a commissionable mutual fund where you're paying 5% upfront commission, and which can create a lot of drag on how fast you build wealth. And it also creates it makes it harder for you to pivot to something else if you've already sunk 5% up front into a particular fund. Or they will steer you towards commissionable insurance products. Not that those are always bad, but for a lot of young advisors at some of those, firms that you see on TV, advertising, or if they're trying to help you and they're doing a budget, but then they roll out this cash value life insurance policies, because that's really the only way that they're going to get paid. And so it's about, kind of finding out like, what are those conflicts of interest? And this is where large language models, ChatGPT is really great now, is if you're not sure which questions to ask, just fire it into the chat and say, hey, ChatGPT or Claude. I'm a Claude person myself, right? But what are some good questions that I should ask this prospective advisor? I love getting questions that I didn't know were coming. That's partly having a master's degree in philosophy makes it easier to deal with those than most people. But never be afraid to ask some questions and find out, what those conflicts of interest are, because we all have them. And I try as well. One of my core values is being authentic and making sure up front exactly what those are. That helps you as the investor, as the client, make the most informed decision, because everybody that's involved.
No, I love that. Actually, what I do a lot of when I work with founders and business leaders, especially in the enterprise level businesses, the employee engagement comes down to incentives. And I think that people underplay. I think in a casual conversation, we don't like to admit that our financial incentives drive a lot of behavior. But it really does. And understanding where the other person is coming from is not it's not adversarial. It just helps you both understand how can we work together, and are our incentives aligned. I love that you bring up incentives. You and I are both big board gamers, and I think that board gaming has a lot of incentives. That's the entire point of the game. What's your favorite board game?
That's a good question. My favorite board game, it varies. Right now, I'm really into Marvel Champions, which is
Really?
it's a legacy card game, but
Yeah.
which probably a lot of people have never heard of. So probably, the game that I will pull out most often is a game called Splendor. I don't know if you've played that, but it's a great gateway game to kind of introduce people to a little bit more what we would call Euro games or more complicated games. But it's actually you can learn how to play in about 10 minutes, and it plays pretty quickly. I love games with randomized setups. I played hundreds of games of Monopoly as a kid, but the problem was, the board was always exactly the same. So when they introduced games that sort of randomized the setup, So it was a very, being able, and this is again one of my core values, right? Adaptability, learning to adapt to different situations is really fun for me, and kind of figuring out, all right, this board is different this time. What are the strengths and weaknesses of it? Settlers of Catan is kind of the first one that really kicked that off.
Yes.
But that's what I like about it is every game is different, and you have to change how you're going to approach it right from the start.
Yes, that's what I love about the other thing I love about Settlers is it's not a competitive game. It's a cooperative game. I mean, certainly I'm trying to beat you, but it's a game in which we trade with one another, and we our incentives are oftentimes aligned to try to win the game. I think that's interesting. Whereas Monopoly is very adversarial. Like if you want to ruin a good family dynamic, go play a couple of games of Monopoly. So I also did some gaming. I got towards the end of my engineering career. I was invited to do some wargaming work with the DoD. And one of the things that I found is that life is not about time. Life is about the number of turns that you take. So if it takes you a year to make a decision, then you only get 40 to 60 decisions in your lifetime. Whereas if you can make those decisions at 6 months, you double the number. If you can make them within a month, you get 12 times the number of turns that everybody else is getting. How do you think folks should look at their financial picture, in a decade? Should they be day trading? Should they be trading by the month? How many turns should they be taking in a certain period of time?
That's a good question. And I would kind of pivot that towards, making decisions that help you win and not trying to not lose, particularly as you are building wealth. In board gaming, we would call that a tempo player, right? But you want to do things that increase, the rate at which you are building wealth, which is where making defensive investments when you're trying to accumulate wealth are sort of contradictory. But that's again where knowing those conflicts of interest for your advisor, right? If your advisor is just worried about their overall portfolio of clients and not wanting to lose money, they may not try to grow your wealth as fast because they're more worried about losing than gaining. So what that looks, ways to get more turns are, there's no substitute for more deposits. And this is what I've kind of learned as I've actually dug into the math of portfolio management. And I think I have a LinkedIn post on this somewhere, but somebody who starts, I probably like a year. So if let's say somebody started saving in 2025 and they started saving X number of dollars a month, and they only got a 5% rate of return. Somebody who started saving the same amount of money a year later, getting an 8% return, it would take them over 10 years to catch the person getting a significantly lower rate of return. If I remember right. But and if at any point along the way, the person who is only getting 5% figures out, oh, okay, I can also get that same percent that guy's getting, then you'll never catch them. So there's no substitute for more deposits. And the best thing I can do is help people make more deposits. That is a much bigger impact than any financial machinations I can come up with you to get you a higher rate of return. Right. So what that looks like is, making sure that you take as much of an advantage of like your things that expire every year, right? A Roth or traditional IRA contribution expires every year. You can't go back and put, if you have more money later, you can't in 2027 go back and do your 2024 contribution, right? HSA accounts are also like that, right? That's the triple tax advantage. So as much as you can take advantage of those annual contributions now, and then find some way to come up with, again, even if you can't max it out, whatever you can do, and then find a way to increase it a little bit every year. This is I reference a basketball drill we did when I was at Asbury called Butler, where we started the beginning of the season and they had to make a certain number of shots in 2 minutes. And over the course of the season, we were able to dial that up. Where, by the end of the season, we were probably making almost twice as many shots in 2 minutes as we could make at the beginning of the season. But we didn't jump from that to, it was like just, one or two more this day and then one or two more this day. And that's the way that investments compound.
Yeah, I love that. I find that I do momentum coaching for organizations. And what I remind them is, this comes from John Maxwell talks about the law of big mo, or big momentum, and good to great, which is Jim Collins. He writes about the flywheel, and that most success, when you see an organization really functioning smoothly, and starting to get those wins and being ready for those extra opportunities when they come along, that really comes because they've done the little things, maybe writing SOPs a little bit better, maybe having the team outings and getting the culture figured out, maybe finding the right partners that can be adaptable. Big Mo starts to be really your friend if you just consistently get a little bit better every day, and focus on that incremental improvement. But you brought up a couple of A words that I want to come back to. The A words in my world normally are referring to A type people. But you have a couple of core values here. You've talked about adaptability, and you've talked about abundance. So walk us through your core values here, and why it makes sense to connect with you on the financial world.
Sure. Well, the first and foremost, the first one is accessibility. And again, this gets back to the whole idea of 4 quarters, is that if I won't help you in your first quarter, then I really would have to call myself 3 quarters capital. Right. So what that looks like practically is that I, as an advisor, I don't have asset minimums. I have paperwork minimums, right? If, I'm going to ask you to actually send me some documents, because what I've learned is that really help gatekeep who's really actually invested in the process. When I coach basketball, like, you had to show up to practice every day. And a lot of people, when they sort of see what practice looks like, they're like, well, that looks hard. Right. So I'm not necessarily worried about how much money you have right now. It's just, as long as you're willing to engage in the process, and then it should end up being a good investment for me, in the long run, because if I'm good at what I do, then, and you participate in the process, 5 years from now, you'll have more money, and then you'll be paying me more money, and we'll all be happy. But bottom line, I try to make myself accessible, but also that looks like, trying to make sure that I communicate with people in everyday language, right? This is part of when I post on LinkedIn, I make kind of these quirky like pictures with comic book captions, just to be, not that I want to be self-deprecating, but that I don't take myself too seriously. I take your money very seriously. But hopefully that also, another A word, approachable. Right. That I try to broadcast on a wavelength that everyday people will understand. I don't try to throw around a bunch of words like, oh, the beta of this portfolio is blah, blah, blah. Right. Now that stuff really matters when it comes to the actual like constructing it. But as far as you're concerned, it's really just like, hey, this company is going to move around a lot less, but this company has a higher, it actually goes up a lot. So that's why it may on paper look like it's more risky. So that's the first one. So authenticity, I talked a little bit about that, right? Just being transparent and how I think. Definitely being, I have this conversation a lot on LinkedIn, of particularly when it comes to advisors that use annuities, right? It's not that I necessarily think that advisors that use annuities are bad. It's just not my approach. Partly, I coached basketball where I could sub players in and out whenever I wanted. Putting your money in annuity or other things that are with surrender charges are very much like playing soccer, right? Or baseball. Like if you sub somebody out, you can't put them back in. So I just don't like having all those restrictions. So I'm just really authentic. Like, this is how I approach things. Other advisors will do it differently. It's not that one is right or wrong. It's just, this is my style and preference. And when I'm really upfront, that kind of helps people figure out like, okay, either Tim's approach really jives with what I want to do, or what, that's not how I want to do things. And then I'm always happy to give people, recommendations of people that might be a better fit. But that boils down to giving them a really clear picture of who I am and how I do things. Going into that adaptability, that's just, I like to make sure that, lots of times people's financial pictures change because their life changes, right? It could be anything from either, positive, like all of a sudden they inherit a bunch of money and they're like, oh, this is great, I'm not sure what to do with it. Or they get a really awesome promotion opportunity. One client, their company got bought out and all of a sudden their stock got all liquidated at once, which was both great and a tax problem all at the same time. Or things like you end up with an adult child who becomes disabled, and you have to be their caretaker. Like a good friend of mine from high school, is in that situation. He's a year younger than me, and now his mom is his full-time caretaker, which is not what she planned on. So you want to make sure that I want to make sure that I manage your money in a way that we can adapt to changing circumstances. And also that, that you can adapt to the free market, right? Like if the free market dictates that I'm no longer the best offer for you, I want you to have the flexibility to take your money somewhere else. And that's something I'm really upfront about, because I personally am not afraid of the free market. I embrace the accountability that brings, and bottom line, I want people to have the ability to adapt, even if it means adapting away from working with me. And then the very last one is embracing that idea of abundance, like we talked about. The playing tempo, where if you look at the stock market as a whole, it's one thing I can guarantee you is if we work together for 20 years or more, there will definitely be probably at least 2 different times when your account value goes down 20% and stays down for at least a year.
Yeah.
Right. That is, I'm really not allowed to make guarantees, but that is one thing I feel comfortable almost guaranteeing. Plus, I don't get in trouble for guaranteeing that. But the big picture, I'm a big adherent for Occam's razor, right? Which is the most likely thing is the most likely thing. And most of the time, our economy grows, and if you're invested in our economy, your money will grow too. So we don't build our processes around the bad thing that happens 20% of the time. We build our processes around the good thing that happens 80% of the time, or, and then the great thing the good thing that happens 60% of the time, and the great thing that happens about 20% of the time. So that's part of the mindset. But then the other part of that abundance mindset is encouraging clients to actually enjoy their money now. One of the major conflicts of interest in the wealth management space is because we're compensated off of percentage of portfolios, at least, a lot of us, myself included, that gives us a lot of incentive to discourage clients from actually spending their money, because if they spend their money or if they give it away, that means I'm going to take a pay cut, which again comes back to being adaptable to the free market. Because if I don't encourage you to spend your money, then you can take it and, somewhere where they will. But it's important. And this is even part of my own personal journey. In seeing different sides of families where they are able to spend lots of time together because the patriarch of the family had invested aggressively and abundantly, and therefore has a lot more to work with, and is free with it and uses it to get together with a family, versus other families where a more fearful approach has led to less resources, and therefore it's a lot harder for them to spend time together. So there's a very personal side of that. But bottom line, I want to make sure that people are encouraged to, enjoy their money. Is just a tool for you to share experiences with people that you care about the most. That's ultimately what we want to use it for. So I want to make sure that you're able to do that, and that you have as much as possible.
Yeah. Well, I think that goes back to your authenticity core value. One of the reasons I wanted to have you back on the show, I had you on the show actually about a year ago. Tim has partnered with me in this thing called LinkedIn Local. We host together with Samantha Klein. We host a gathering for Lexington, Kentucky once a month, and it's the anti-networking event. The rules are there's no sales lines. Just tell me what you're excited about. Tell me who you've been helping lately. And get to know one another in the community. Super fun. I'd love to hear your thoughts on what you like most about LinkedIn Local, but then also, what is your one tip for doing networking right? You go to lots of networking events. You are in more of an executive circle. You do more of the workman circle. I've seen you in every level of event here in Lexington. So I'd love to hear maybe 1 or 2 thoughts on what makes networking great, and what you like most about LinkedIn Local.
Yeah. So a few things. So the main, I guess I'll call it three reasons I would encourage people to network. And I'll start with the money, but end with, what I think is actually more important in the long run. So one, building a robust professional network is the best way to grow your career. When I talked about, earlier, making more deposits or ways to increase the tempo of building your wealth, there's no substitute for getting jobs that pay you more. There are lots of studies that show that, unfortunately, loyalty, while it should be rewarded in the workplace, it usually is rewarded with falling further and further behind in terms of median salary and what you do. Right. So building, finding contacts and that next job that will help you not only increase your paycheck, but hopefully give you new challenges and help you build new skills. Right. That's where professional networking comes into play. Or the other, if you are in a good supportive environment where your company is interested in helping you grow, then you're going to meet people who have been on that journey before or will help you add more tools to your toolbox. Right. It's just like you want to be in a gym with other really great basketball players, right? If you're in a gym where you're the best player there, you're not going to get better. The other people will get better going against you, but you won't get better, right? So finding people that will help you level up is really important. The productive side of that, a good professional network is the best unemployment insurance out there, right? There's government unemployment insurance, but it doesn't pay very well. I can give you an insurance policy that will pay you for life if you get hurt or sick and can't work anymore. But if you just get laid off, I don't have insurance for that. And your professional network is the best insurance. But more importantly than that, I think and this is what gets missing, and what I liked about our event, because we try to bring in anybody and everybody, and not just people who are in business development where they're networking for the purposes of finding clients. Because I think one of the best things that networking can do for you is just help you meet more friends. Right. There's a lot of research that shows that loneliness is a really significant epidemic and a problem for people. And particularly if you're a remote worker, right? One of the things that's made The Office a magical show is the way that those characters became lifelong friends, even though they would, bust each other's chops and play pranks on each other and could be kind of mean because it needed to be a comedy. But there was this, because they spent so much time together, they became really close friends. And now the more we have remote work, the more isolated you become. And so just going out and going to a networking event is particularly a safe networking event. And this is why we want to make sure that people feel like it's a comfortable place for them to come to. Anyway, that's probably the most important reason is you might, meet somebody that becomes a really great friend.
Yeah. So. I hear you on the loneliness thing. I'm a pretty big introvert. I remember when, I'm a pretty big extrovert. I remember when COVID came out, they said, hey, if you feel uncomfortable, you can head home. It was like a meeting, like on 11:30. And I had been in a secured facility for essentially 15 years of my career, and I'd never really gotten the chance to work from home. So I just raised my hand. I was like, yep, I'm going home. Just wanted to try it out. And I loved it. But then I noticed that I started to get sad, and like depression might be the right word, but it was just kind of like a general drop in my energy and my enthusiasm because I wasn't around people. And it became so easy just to stay home rather than, get up and put work pants on and go to work. You just need the top, outfit put together. But yeah, networking has been a real big spot of joy in my life, especially when you have a consistent networking group that you go to. There's a couple of really great ones in town. Here in Lexington right now, a guy named Daryl Verts runs one on Fridays. It's every Friday, and it is always full of people. And you start to become known and seen for what you do. My advice to folks on networking is two things. One, don't sell me something, because we haven't built that sort of a relationship yet. And the second one is that most of my business from networking events have come from a second order friendship. So I've built a relationship with somebody like you and I have built a relationship. And then when one of our clients needs the other one, it's an easy referral from there. Most folks probably don't need your service at the moment, but as you build that relationship, you become a very easy referral. And then you start to discover the fun of living in a community as opposed to living in a marketing funnel. Well, we are running out of time here. This show is expressly designed to kind of highlight Tim because at LinkedIn Local, we're starting to do spotlight episodes of some of the folks that have been regulars year over or month over month over month. Tim, I'm just going to give you the last couple of minutes of the show here to talk to the audience, and then I will close this up.
Sure. Well, thanks, Drew. So one thing I'll throw in quickly my 2 networking tips for introverts. One of the things I learned right away, because I am an introvert, is if you go to the best thing you do, just go, even if it feels uncomfortable. Because what you'll find is if you just kind of stand by yourself at a networking event, people will just come up and talk to you. So it takes all of the pressure off, especially the ones that have those like kind of standing tables. But if you don't feel comfortable like actually initiating a conversation, that's fine. Tons of people will just come up and start talking to you. And then you can just kind of, go from there. And then also another trick is one of the things in a networking event, there's sort of an etiquette where if you see people in like a little circle, talking to each other, you can just kind of like creep in, and they will normally like open up the circle and let you slide right in. So there's my networking tips. So one last thing, as far as the best way to get started, if you're like, I'm not sure anyway, so this is one way that I make myself accessible, because what I found in a lot of networking is people just don't feel comfortable. They're worried about, just like in networking, they're worried about getting a sales pitch. So one of the ways that I help connect with people initially is just, if you have a money question, any money question, doesn't matter what it is. I've got a special link. I have a calendar link where you can just set a little 10, 15 minute call with me and just ask me the money question that you have, whether or not it's like, I don't understand how interest rates work on my mortgage, or I'm confused about my auto insurance, or I don't really know how this target date fund works on my 401k. You're free to just ask me a money question. I'm happy to get you pointed in the right direction, even if it's just like, here's a good book to read, here's a good YouTube video, or here's an app that will help you get started on your budget. So don't be afraid of, I'm not a big bad wolf, not going to eat you. So don't be afraid to ask a money question. So that's what I would close with.
Yeah, no, actually, and I'll go ahead and tell you, Tim is being a little bit modest here. He can really dive as deep as you would like to. So if you have any of those money questions that you've been saving, that maybe you're intimidated to talk to your advisor about, maybe you need an advisor that you can trust, that is accessible, that can help you figure out how to manage all 4 quarters of your financial life. Tim is a fantastic friend first, and then financial advisor second. He's both great at both. So if you're an introvert, come out to LinkedIn Local. If you're an extrovert, come out to LinkedIn Local. And help us grow the community and build the community networking the way it should be, without pretense. So with that, we are